Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rice Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. What's happening, everybody? How y'all doing? Hopefully everybody doing well this afternoon. Hopefully everybody gonna do a quick price action recap since we didn't get a chance to get into price last night. Excuse me, as I promised I was gonna do a price action recap today. So with that being said, let's get into it. Looking over here, this area here, I don't know if y'all can tell because it's very, very small, but this is our new week opening gap here, right? Residing in that portion of the screen. So we open up the week in this area here, in this little area of consolidation right there. That's where we opened up the week at, in this area here. Now, when we opened up on Monday, price has started to trade up, right? We traded up here, then we ended off Monday right around this area here. And on Monday, we made the statement that either this was going to be an extremely bullish week or it was going to be a bearish week. And as we see, right, the week ended up being an extremely bullish week, right? A trend week to the upside, right? Had a nice trend week to the upside. Now, when we zoom out, right, and look at price, and let's go to 15 minutes so we can get more information into the screen, right? This is why we always say that it's important to zoom out and understand where we are in price, right? We were watching for signatures to see if price would continue the short-term sale program, right? We were watching price to see if price would continue the short-term sale program, and we made it clear, right, as we were studying price, that we understood that we were still in a higher time frame buy program, and the higher time frame had not given us any indication of bearishness just yet. Okay, let me keep this on the chart over here so I can see when people be trying to come in.
So I can see when folk trying to come in. Is it a way? I wonder if it's a way that I can, but I ain't got nobody in here I could give the. See, back in the day when my sweetie used to be in here, I could just give her the rights to let people in, and that way I ain't had to keep looking over there.
Isn't there a bell that you could turn on so you know when people are there? Like when they arrive
Yeah,
in the
I
room?
just saw. I just saw it say. I saw it say play a sound when people join or leave.
Yeah, so you can do it that way, at least when you hear the sound.
All right.
They're not sitting
Yeah.
there.
Okay. Yeah. I just turned that on. All right. I just turned that on. So yeah, when I hear something, I know I need to look. All right. Appreciate that, Marco. You know, I'm not a zoomologist. All right. So we have been watching this high here because the lower time frame was in a sell program. All right. The lower time frame was we kept extending the sell program. Then we traded back up into a premium. Then we came down and we poked down below that low a little bit. Right. So the lower time frame was in a sell program, and we was watching this high to see if that was going to act as our market maker reverse. So I'm a smart money reverse. And with the higher time frame, right? Still being in the buy pro. I can't zoom it out enough on 15 minute, but still being in a buy program, we stayed privy to that. Right. Boys, somebody shut my door. Shut my door. Never do nothing until I get on live. Then they want to come out there in the living room and go crazy. All right. So now we started out the week here. And in the grand scheme of things, well, just for the week, it just looked like we went straight up, right? But in the grand scheme of things, we can see, right, IPTA being IPTA on as we look back across this whole span of time. We can see all of the signatures of IPTA being IPTA, right? When we come here to this area of accumulation here, right, we can see that we got a wig snatcher there, right? Right, because we consolidating here, took out the buy side, dropped down, took out sell side. That's when we have poked below there, traded back up above that buy side. That's our wig snatcher. Traded back down into a discount, and then started this week and went up to the delivery. Right, we can see, we can even see here coming from this area of accumulation, right? And this right here, what from here, we got an example of offset accumulation, right? Right, offset accumulation with multiple retracements before delivering, right? We come here, we got an example of reaccumulation where we consolidate here, right? Treat this whole area as the consolidation, expand up, come back to a discount, and then deliver, right? So, and all of this was up here during this time when the higher time frame was just engineering liquidity. So we could frame it both ways. We could frame bullish reasons and we could frame bearish reasons. And so that's what we've been the whole time we've been in this area here, right? We've just been looking at things from both sides, the bullish and the bearish, and not trying to do anything long term based off the higher time frame, right? Because when we look at this daily chart, right, we can see that we had been in this area here. Well, no, this area here. Yeah, right. We had been in this area here for all this time, right? We expanded up, retraced back down, poked it to the high, right? We were saying that this right here was the higher time frame breaking market structure, right? Remember we talked about short-term shifting, changing the state delivery, right? I was like, I like to call this uh 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 um short-term change in the state delivery here, because until we trade down here, right, that's going to be our true change in state delivery, because this is the move, right? This is when the elephant stepped in the pool, down, then up, right? So what long as we was up here, the higher time frame is still bullish. It haven't given us our thing. And now we see we finally made it back to that high, right? Took a really long time for the NQ to get there. All right. But we finally made it back. And it messed with us for a while. When we look at last week's price action, right? Looking at last week's price action, it went up there on Wednesday, right? Came up there on Thursday, took forever to hit it on Friday, but we finally hit it and we kept going up. Now, this is what I was about to talk about before we started talking about risk management yesterday. Shout out Rhonda for talking about that. I think that was a very good lesson that everybody can use. The post that I never posted on Discord is I was talking about I had read it off my phone. It was something about the Fibonacci tool being your best friend for looking for targets, especially when you're at all-time highs. Right. And I was going to put it in there for you all to study. Right. But since we are here, right, and we're looking at this, we're going to ignore what it did thus far. Right, we're going to ignore what it did thus far. But can everybody see, understand, or is there anybody who do not understand why I got the Fib tool anchored from this low to that high right there? Is there anybody that do not understand why? While I take me a sip of Fresca. All right. I'm gonna take that as everybody understand why. So going back to,
Wait a minute, can I guess?
okay.
Was that because there was the manipulation leg?
Yeah. Mm-hmm.
Okay.
Yep. Yep. That was our manipulation leg. And not only was that our manipulation leg, what did it form?
Well, Judy swing?
Nope.
A wig snatcher?
Nope. Where do you anchor it? Where do you anchor the Fib? You anchor the Fib at what? And yes, it's the manipulation leg, but what do you want that?
The lowest low and the highest high of that?
Not the dealing range. Not the dealing range. We're looking for what starts with a I. It's a three, let me see. Yeah, 3-word phrase. Starts with the I.
Oh, wait a minute. No.
Yeah, it's punching you in the mouth. It's punching you in the mouth. That institutional was hitting you all in your mouth. Yes. Institutional. Institutional.
Order flow?
I said it's a institutional. What is
Somebody
this?
help me. Can I phone a friend?
What is this? What's this? What is price? What is price doing right here? Price is forming what?
Is it institutional market structure?
Yes, institutional market structure,
You
right?
okay?
And we identify the institutional market structure, right? When we see that intermediate term low or high being formed at a anticipatory reactionary point during what we identify to be that manipulation, right? So since we're looking at this as being manipulation because we're bullish, right? We're looking for this to become a wig snatcher instead of a bearish Judas swing. What we come down here and we form this low, right? We see we got a low here that we swept, we're manipulating out, right? We form this low, and then we come back over here on this side and form a new low, right? We got 3 lows that form a swing low, right? Which gives us a intermediate term low. Now that's an important low. That's why he's smiling at us, right? He's important. I'm important, right? So now we're anticipating that to be a protected low, right? So that's why we're looking for the institutional market structure, because this is all the market structure is fine, but we want to see that institutional market structure that goes along with the institutional sponsorship, that goes along with the institutional order flow, that goes along with all the ducks are in a row right now. Quack, 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 right? So that's where we look. We anchor the fib at that intermediate term low and take it back to the high, right? Back to the high of that low, right? So when we run it back there, that's how we anchor our fib to look for our projections, because we're anchoring it on a price leg that the algorithm is going to be referring to as far as how far can it move, right? And we're going to look at it in the terms of standard deviations, right? Half a deviation, full, 1.5, 2, 2.5, 3, right? We're going to look at it in terms of deviations, right? And the higher the time frame you have for your manipulation leg, right, you won't go as many deviations. Now, when you're doing it based off a really low time frame and you getting up to 8, 9 standard deviations, then you probably want to anchor it on a higher time frame so that you can get more accurate projections. Because once you start getting up 5, 6, 7, 8 deviations, the accuracy of that, something else has happened where you can anchor it off of a new point to get projections, because you're so far extended in the projection, right? Did you say that you anchor it low to high, not high to low? Yeah, you go from the low to the high. You stretch the fib in a direction that you want to project, right? So if you're bearish, right? If you're bearish, right, you take your fib and you anchor it on the high, and then you pull it back down to a low, right? If you're bearish, right? If you're bullish, you put it on a low and you pull it back to a high, right? You're always pulling it to the left. You're putting it up and to the left or down and to the left when you're doing your projections. So you pull the fib in the direction that you want to project. So if you want to project up, you anchor the fib and pull it up. If you want to project down, you anchor the fib and you pull it down, but you're always pulling to the left. You're pulling up and to the left and down and to the left, and you go back to the high or low of that manipulation leg, right? So, like, just say if we had like a swing high here, right? If we came here like that, you would pull to that high right there, right? You're not pulling all the way over to this high over here. You're pulling back to the high that created that lowest low, and you're pulling back to the low that created that highest high. Yes. You say it's opposite of what you previously learned. I wonder how that is, because the way the tool is made, I wonder how they got that. Because the way the two now, if if they if they don't set their tool up right, then you can, if they don't set their tool up right, because the way the tool works, because matter of fact, let me see here. Let me find like the fib trend base. Is this it? Wait a minute. Fib retracement. I want the extension. Fib trend extension. Trip bait trip. Blah, blah, blah. I sound like Deborah. Trend base fib extension, right? So I'm gonna take this tool here. And the way this tool works is, right, you click it, and then you click it like that right there. Right. So based off this here, right, I'm trying to see how far that can go. Right. So from that way to that way there, that's how far I'm looking for it to go. Right. So if I'm trying to see how far this can extend, right, I take it from here to here to here to see how far it can go. And that's the trend base tool, right? And then if we go right into this right here, see, it's like positive numbers. It's positive number. All of these are positive numbers in there, right? All these are positive numbers. And if you set your tool up, backwards, then you could stretch it down, right? You could stretch it down. But if we go in here and change all of these to positive numbers, like, yeah. All right, if I come in here and change, if you come here and change these to positive numbers, right, that's good enough there. All right, if I change them to positive numbers, then the then it it'll project up, right? It'll project up, right? So if I take it from here and pull it down, it'll project up like that right there. If you put in like positive numbers. So if you put in positive numbers, then you have to pull it in the opposite direction, right? But the way I understand it and the way it was taught to me, right? The way I understand it and the way it was taught to me is pulling the fib in the direction that you want to extend, and that makes sense in my mind, right? So I click it and I want price to go up, so I pull it up to the high, and it shows me how far it can go. And if I want it to go down, right, I click it on the high and I pull it down because I want to see how far down it can go. And that way, you know what I'm saying, you just put in negative numbers in there and it extends. So if you have positive numbers in your fib tool, you're going to pull it down and to the right, which is, you're going to put it down and to the right. If you got positive numbers in your tool, and then if you got negative, if you want to be bearish, all right, so bearish down, I can't even think. Positive numbers, you pull it down for bullish. Y'all get it. Y'all get it. Y'all get it. Y'all understand. So
If you wanna pull it in a direction you want it to go, negative numbers. If you want to pull it in the opposite direction, positive numbers. There you go. Now, what was I saying? What was I saying? I can't remember what I was saying. I ran out of. Oh no, there.
He's talking about institutional market structure and then projecting how high it could go since we
Oh
have
yeah.
it to the
All
left.
right. Thank you. Right. So we got we anchored here because that's our institutional market structure. Right. We can even use that little face there. Right. It's a swing low there. This is the lowest one. So that's the reason why I use that one. But we got one there. Now we can even use that one there because it's, right. And then that's we anchored it there for our projection. So we're at all-time highs. And so we're looking to see how far can we go. And we do that in half and full standard deviations, right? So, and we know based off of how the algorithm typically moves, right? Then when we get to like that 50% or a half of a deviation, sometimes we get like a consolidation or a retracement when we, you know what I'm saying? And then the same thing at the fulls, a consolidation or a retracement, and we're looking at these points, right? We're looking at these points here as anticipatory reactionary points because that's giving us targets, right? These are targets we can hit. Boom, that's a target. Boom, that's a target. Boom, that's a target. Meaning we've got to Picasso's house because we don't have any structure over here to go off of, right? And then we're not trying to call a reversal at this point. We're watching to see, does price want to continue or reverse? Watching to see if price wants to continue or reverse, watching to see if price wants to continue or reverse. We're using this as our structure because we don't have any structure. And then the same way we use this, if there's no structure over there, same way we can use this to target specific highs, right? If we have a swing high over here that falls right in line or just below that half a standard deviation, we can target that as our exit point or someplace we want to trim. If we got another swing high that falls in line or very near the 1.5 standard deviation, and then we got a swing high here, we can say, okay, I'm going to trim something there and leave a runner to see if I can hit that high up there, because that's the high of my market maker buy model, and I'm anticipating to go there, but I'm taking some off at this area here, right? Because that's a intermediate term high that's inside my market maker buy model. I may see a deeper retracement or reversal off of that. Okay. Use it in the same way when we're not at all-time highs, but when we are at all-time highs, it gives us real numbers to shoot for, right? And the reason why we want those real numbers is because you can't go into your platform and say sell at -5 standard deviations or sell at 1 standard deviation. You actually need a number. Sell at 24,096, sell at 24,100, 24,127 and a half, sell at 24,159 even. You need these actual numbers in your platform, right? So that's why you run the fib tool to get those projections. All right. Tracking. I hope we're tracking. Okay. When we put the meat back on the bone, we see that we came up to 1.5 standard deviations. 1.5 standard deviation is 24,159 even. The highest high on Friday was 24,159 even. You can't get no better than that. What Michael say, you can't get no better than perfect, right? You can't get no better than perfect. There is no way
on God's green earth that a 53-year-old man from Fort Lauderdale, Florida, will be able to come in here and anchor a fib tool on the candle low of 9:35 in the morning at a price of 24,001 and a half, and anchor it the other end to the high of 9:30 5-minute candle at 24,064 and a half, and run those deviations and have one of them deviations say that the algorithm can possibly reach 24,159 even, and it does it to the tick and then pulls back. Ain't nowhere in the world that would happen if there was not an algorithm. If there was nothing that can be learned and you could track, they don't teach this in the Broward County public school systems. I'm sorry. All right. I hate to bust anybody bubble who don't believe there's an algorithm, but they don't teach that in the Broward County public school systems. Okay. And as you see here, we just kind of walked through the case study together. This is what I was going to share in the Discord, right? Remembering where to anchor your fib. We're anchoring it at that institutional market structure, right? We're looking for the little smiley face down there. He's happy because he's an important low. That's an intermediate term low. It's a swing low with a short-term low and a short-term low on opposite side of it that's higher than it, right? So now when I put that back, it looked like he got on some of them lashes that be when the young ladies have on the lashes and they lashes be talking, be like, right? He's blinking. All right. So now like we were saying, price was trending up. Now, this is what I was saying before, right? This is what I was saying when I was talking about that. Okay. So when we look here, right, this is the lowest point of this entire move up right there, right? Right there. So you could realistically anchor from there and come back to the high right there. And now, but if you see here, when we start out, right, we're coming up. If you look right here, right, we got some beautiful symmetry in the projections, right? They're marrying up to each other very well. But the farther we go, the more we start getting off, right? Right. The more we start getting off, they're getting further and further apart, right? That's what I was saying. And this is on the same time frame, right? But this is what I was talking about when I say if you do your projections on a lower time frame, the farther you get away, it's going to start getting off because something else has happened on that lower time frame that you can be anchoring to give you a more accurate projection. See, this anchor point here happened well before that one. So the farther we get away from this manipulation leg, the less accurate the projections are getting, right? The projections are getting less accurate the farther you get away. So that's why, like, as price continues to make structure, it continues to, cause we came here and we manipulated out some lows, right? We came here and manipulated out some lows. So now we can move over here to that manipulation leg. We don't have to keep going off of that one, because if we stay here, the accuracy gonna start to get off the further away we go. All right. Glad I realized that. That gave a good example of what I was talking about. And it's the same thing if you come inside like that same little anchor point, but if you came to, that's a 5-minute time frame. Well, we really ain't got nothing on the 1 minute here because that was such a big move, right? That was such a big move. We really ain't got nothing to like go off of here because it's such a huge move and so fast. But let's just say if it was, right, another swing high right there on the 1 minute time frame that we could use, right? And move this over so we can see, right? Then we'll see as we go up, they start to, get kind of funky as you go up. they start to fall out of, you know what I'm saying, sync with each other, because you're getting farther and farther and farther away from this anchor point. All right. Okay, dope. All right. Now, looking at price over the week, we was saying that it was continuation from here. Once we oh, this is another good lesson here. All right. Remember when we be talking about y'all always hear me talk about the original silver bullet, right? Y'all always hear me talk about the original silver bullet. Once we make it up here, right, to this last area of reaccumulation or redistribution, right? Right. And we coming up here because this is where we started out on this side here. And then once we come here and break that high, trading up into this last area of distribution, of this first area distribution. So now over here, this is going to be the last area of accumulation, right? And the sense, it was a lot of back and forth over here, right? There was a lot of back and forth, but in the overall sense of what price is doing, once we took out this high right here and retraced back down to a discount, price never, right, really gave a deep retracement after that. It was just straight to the destination, right? Now, this was over several days, right? But it was just straight to the destination. There was no more deep retracements, right? There was no more deep retracements after we traded above here, right? Once we took out that high there, came down and swept, you know what I'm saying, gave that discount entry. After that, no more deep retracements there, right? And that's right up there in that upper quadrant down there when you don't want to see price give you no deep retracements once you get up there, right? That upper quadrant there, right? This is that last area of reaccumulation there, right? We came up, poked above there, dropped down. That's that last deep pullback right there, right? And if you notice, right, price came down into a discount right there, equilibrium, right? And after that, you ain't get no more deep pullbacks. It was just pretty much, for lack of better terms here, low resistance into the buy side, because it never came back down here anymore. And that's the same thing we'd be looking at on like intraday time frames. Once we get up here, right, and we take out that liquidity, we don't want to see no deep retracing coming back down to the discount. You want to see speed into that high, right? Came down, took that out, consolidate there, boom, right? Straight up to the high. And this started this week. This was the start of the week. So we started this week, right? And we've already, this was our move here. We took out that liquidity there, right? We took out that liquidity here to end off last week, right? We dropped down, then we closed there, right? So we've swept that liquidity, pulled back, then we start a new week, right? Now that we swept that liquidity above there, right? We come back up, no more deep retracements from this area right here. This week here, all we did was make our way up to that buy side liquidity, right? Took forever to get there. The whole time we're watching to see if it's going to leave it, but we kept saying that's the only thing up there, liquidity, and we're in a buy program, right? And looking at price, what are we doing? We're heading to that high, all right? And then once we hit that high on Friday, that's when you use your projections to see how far can it go, right? Just how far can it go? All right. What else can we talk about? Um, I think that's it, man. I think that's it. We looked at like all the different concepts that price was really all the different concepts that price was really giving you. All right, let's look at one more thing, and then I'm gonna go finish my lunch and start bugging my son because his mom want me to take pictures and all of that right there for his homecoming. All right, so we're going to let's look at this right here. This is a 15-minute time frame. I could have just put a horizontal line. All right, that's good enough there. Okay, so let's check out this time frame here. Let's see if it offered us anything. We're looking at reclaim order blocks, right? Watching reclaim order blocks. So looking at this time frame here, right? We have the left side of the curve. We go down, come back up, right, and get a break in market structure, right? So we start here, we drop down, right? In our reverse, we come back. And from this point here, all thing we do is just rally up, right? No rear retracement coming from here to there, right? And take out structure. When we retrace back down, right? Right. Now, remember, split your curve to the right and the left side, right? Split your curve to the right and the left side there. So when we come here, right? When we come here and we look at where we retrace back down to, right? Remember, this is the right side of the curve, right? We're not looking here, right? This is the right side of the curve. You're looking to the left side of the curve for your reclaimed order blocks, right? And when we come all the way back over here, what do we have right there? A bullish order block on the left side of the curve, right? At this area of distribution. And we're here at this area of accumulation. We retrace back down, right? When we look here, right there, we got a bullish order block here where you want to see the sensitivity of the order block at, right? From the wick to the opening price, you see right there, we trade down just inside the opening price of that down close candle there. If you're looking at consecutive candles, right, you're going to be looking at the last down close candle opening price. And we got 3 candles there to say if this was the left side of the curve you was looking at, you'll be looking at that price right there, right? And then you say, well, Tim, how do you look for it when price hasn't retraced yet, right? So what you got to do, you got to look at all of them pretty much. You got to look at all of them pretty much when you identify, okay, we on the right side of a market maker buy model, right? So now that you know you're on the right side of a market maker buy, just say if you identified here, you're on the right side of a market maker buy model right here. Once we go right there, you say, okay, we're on the right side of a market maker buy model here. Now, let's do this right here. This is when we identify here. Once we take out that high right there, right? Say, boom, we're on the right side of a market maker buy model now. So now what you do, right? You come back over here, right? Looking at the left side, whenever you get a bullish reaction like this right here, see how price popped up off these down close candles right there, that pop up right there, right? You're looking at that right there, right? That last down close candle here, that last down close candle, right? You're looking at that there, because when we trade back above that right there, that's your bullish order block right there. You're looking at that down close candle there, right? It's a slight pop up here, just a slight little pop up there, right? So you're looking at that down close candle there, right? For me, right, when we get into like little areas of consolidation like this right here, I don't try to look all in between here, right? I just look for when price was moving, right? So price was moving down here, okay? So we got a little, and since that one and that one is right there next to each other, I'm not even gonna worry about it, right? I'm not marking that one out because it's right there inside that one there, right? So then we got like a bunch of little consolidation and stuff going on inside there. I'm not gonna try to, you know what I'm saying, really nitpick and, well, I guess I could do that one there because that ain't near anything, right? That one ain't near anything, so I can mark that one out because it's not near anything. But this one here, it's inside there, right? This one right here, this is a big move, so I would give some consideration to that one, right? It's inside there. I would give some consideration to that one, right? But these over here, all of that's overlapping, right? All of this is overlapping, and we got later points in price where, you know, you got opportunity to look at it, right? So you're looking at your last down close candle before you got some type of bullish reaction off of it, right? We got one here, but like I say, we already got that price right there marked out, so I will mark that one out. Okay. All right. So you're looking at those, and that's how you do it all the way, you know what I'm saying, all the way going through your price, right? All the way going through your price, right? Last counter there, right? We said these here already got some later price action there, right? It's some stuff inside here, but we already got later price action there that's covering that. So, you know, I'm chalking it up inside of there, right? Instead of, let's see, coming here to this one there, right? That one there falls so close to this one. So I'm just, you know what I'm saying, marking that instead. All right. And when we, all right, take the meat off the bone, then come back over here. Right. Now, right, we can see here as we are coming back there, we drop down here, right? On this time frame, we're respecting this order block right here, right? This your order block right there, right? We're respecting that order block right there. Now, there's something on a lower time frame that you could possibly connect the absolute low to, right? If you went inside of a lower time frame, right? It's probably something inside here you can absolutely connect the lowest price to, right? But for this time frame, you see we're coming back into that reclaimed order block right there, and we're accumulating orders inside that order block right there, right? And we come back here, okay, when we drop down on this deep drop down here, right? We come back over here to this bullish order block right here, right? We drop down, right? We're inside that reclaimed order block right there, right? Even here, when we was inside here, right, dropping down inside this area there, right? We drop down to that one that's way back over there, right? Drop down to that one that's way back over there, support, drop down, pull back into this one here, right? Pull back into that one there. But if you notice, right, if you notice, where are we getting the reactions at? Like this big reaction right there is coming off the one, the one that's farthest, well, closest when you go to the left, right? We're not getting the huge reaction. You know what I'm saying? We're not getting a huge reaction based off of this one all the way back there, right? Based off this one all the way back there, we're getting a huge reaction off the one that you come to closest. That's why I do it like IPTA, how IPTA looks back 20, 40, then 60. I look at the closest one first, then the next, all right? And yeah, that's pretty much it, right? That's how you work with reclaim order blocks, right? Come down until you reclaim order block there, right? Blast off. And then when price came up, when it traded back down here, right? We come back down, come over there, boom, right? In this case here, we hit that one right there, right? Traded down to there. And we had some other PD arrays there. And then when we looking over, right, you say, Tim, that's way over there, right? You said you're looking at the first one, right? So if we come back, coming from where price is, right, and where price coming down from, when we look over here, right, that is the first one on that side of the curve. You know what I'm saying? Come from where price is, price trading down, came down right here into the first last down close candle on this side of the curve, right? Because if you look at this one here, price is coming down to the top portion of it. It's not coming to that last down close candle, right? So as price come back through, that's the first down close candle that it gets to on the left side of the curve. And we trade all the way back down into that reclaimed order block. And then we start our move up. All right. Hope y'all got something out of this. Anybody got anything for me? Monica, I'm glad you learned something from this, but it ain't gonna be a saved video. Had to be here to get it.
Thank you, Tim.
You're welcome. All right. I don't see nothing in the chat. I don't see nobody saying nothing. We're gonna go ahead and call it there. I appreciate y'all for hanging out with me on this Saturday. I just wanted to come in and share some stuff on price since we didn't get a chance to go through it yesterday. And I hope y'all found it as entertaining as I did, the way that that institutional was punching Deborah all in her mouth. He learned to say, no, I need to rewatch it. Now he learned to it ain't nothing in here that I said today that I ain't said 100 times already. the field information. We done talked about that too. But now you got a new reference. All right. All right. I guess I'll save it. I'll save it just for the field information.
Thank you.
What you thanking me for?
Because I need to rewatch that part.
All right, man. I'm gonna go eat my food and then go play Super Dad. It's homecoming day for my junior in high school. I had to take him to go get his flowers for his sweetie. Now I got to go out here and help him put the bouquet together and then take pictures and then go drop him off at Applebee's, then go pick him up and take him to the school, then go take pictures again, then go pick him up after homecoming done. All right, man. All right, Venus. I guess I'm gonna leave it up since Deborah and Hitler and she'll talk about they need to rewatch the field portion. I guess I'm gonna leave it up. All right. I'll see y'all on Monday, man. Y'all enjoy the rest of y'all weekend.